Hi guys, welcome back to the Financial Interest YouTube channel. My name's Dan. So in this week's video, I'm going to talk about how to analyse company management. Now, one of the important aspects of assessing any company is actually analysing its management as well. So we've looked previously into videos such as Circle of Competence and also Moat. So the next stage in this is to kind of assess the management. And obviously good management plays a critical role in the success of any company, because it's the management who make the decisions of how to allocate the capital and decisions on what they can do to grow the company, whether they look to mergers and acquisitions in order to grow the business. So there's lots of different decisions that come down to the management. So I always like to kind of go to Warren Buffett quotes, because he always gives great insight. So one of the main quotes that Warren said previously is, "I try to buy stock in businesses that are so wonderful that an idiot can run them, because sooner or later one will." So there's a few ways we can assess the management. Now, there's certain parts of this are going to be objective, so we're going to be looking at numbers, and certain parts of it are going to be subjective, because we're going to read different opinions on the CEO, opinions on the management team, and that's kind of a little bit more subjective when we have to kind of form our own opinions on that. So if we're taking a look at the kind of objective sides of this, we're looking at return on equity and return on invested capital. So that's something I've just recently made a video about. So I will leave a link to that video, which will come on your screen around now. So I'd recommend watching that one as well. With the return on equity and the return on invested capital, what we're looking at here is how effective the management team is at taking all the money that's coming in and then kind of generating a return. So what we're looking for from the management team here is return on invested capital of at least 10%. And we want to see that this is kind of maintained or growing. We don't want to see this decreasing. And the final metric we're looking at here is debt. Is the management team taking on a lot of debt? So that's one thing we want to be careful of. If you're just starting out, I'd recommend kind of just sticking with companies with no debt. You'll be able to find quite a lot of decent companies that have got absolutely zero debt. So it's kind of best to stick to that when you're first beginning. Another thing we also want to look at is the CEO and the management compensation plan. Obviously, we don't mind the CEOs getting well rewarded for managing the company and doing a good job, but we kind of want to see them with quite a lot of stock, because then you know they've got skin in the game. You know that what they're doing, if the company kind of performs badly, then that's actually puts their own personal finances at risk as well. You want the management team to be aligned with the shareholders and kind of thinking for the benefit of the shareholders. As part of the more subjective elements, we need to look at different areas of research which will give us an indication of how the management team and the CEO is doing. So analysing the management can be a bit of a fine art. It kind of sits between the kind of subjective areas and the objective areas. So a good way to start off is reading the CEO letters to shareholders. So this will kind of be published on their investor relations website each year. So you can kind of go and look at the shareholder letter from the CEO and then read that, see if you notice anything particular with that. That's always a good way to kind of get an idea of what the CEO is kind of saying about the business. Do they feel optimistic, or is there kind of problems they see as well? The second way is to go and read news articles on the company. So you want to check out publications. You might go on YouTube, or you can look at CNBC or Bloomberg, or like Wall Street Journal, Barron's. These are kind of all publications which will have articles. Seeking Alpha would be another good one. So you want to kind of read as much information about the management team as you can to kind of form an opinion on them. And you want to be looking for good and bad things as well. So if you really like a company, you don't want to get confirmation bias and you start just looking for the good things in the company and ignoring any of the media which is kind of negative about the company. So you want to get a broad overview of this in terms of both the good and the bad. Another thing that you should always do is listen to the quarterly earnings calls. That's when the companies release their quarterly results. They'll do an earnings call, and after they've gone through their earnings, they'll answer questions from people who work for the major investment banks and things like that. So it's good to listen to how the CEO and the management handle any difficult questions they get. You might be able to find here kind of if there's a problem, are they trying to kind of gloss over the problem? kind of being like a politician, trying to ignore what's going on and that kind of thing. So it's always good to listen, because then you can pick up the different things in the tone of people's voices, as opposed to just reading it from the actual script. And the final way mentioned here is to look at the reviews on Glassdoor. So Glassdoor is a website which you can kind of review the companies you work for, or you can also like rate the CEO in the company. So it's always kind of interesting to see how the employees view the company as well. So now we need to go and look at the characteristics of the management. So these are kind of personality traits and things which obviously we need to look into further detail on. So we want the management to be honest and have integrity. If there is kind of a real problem in the business, we want them to be frank and straightforward about that. We want them to bring the problem to the fore and then also tell us how they plan to deal with the problem, how long they think it's going to take to fix the problem. There's nothing worse than they're kind of trying to gloss over any issues that are going on in the company and trying to make it sound like everything's all right when really it's not. So it's important for the management to have the honesty and integrity when they're conducting interviews and anything like that. And you can quite often spot it if they're just trying to skirt around the question as well. So another thing is they need to be trustworthy, because obviously we're investing our money, we're trusting in that management team to grow the business, to use our money to generate returns from that. So it's really important that we actually completely 100% believe and trust in the management team to do that. And then the next point is skill. So the skill of the management team will be reflected usually in the numbers we've mentioned. So the return on equity or the return on invested capital and any debt. That's one of the kind of key objective metrics that we look at when assessing the team. And obviously we want the CEO to be passionate about the company. In an ideal situation, this is why we like founder CEOs. So the CEO will be the person who started the company, or they'll still be on the board or something like that, because that kind of tells us that they've got a passion like for developing the business, because they were the ones who started it. So the next thing we need to look at is, does the company have a big, hairy, audacious goal? So BHAG, as it's known, is a phrase coined originally by Jim Collins and Jerry Porras in their book Built to Last: Successful Habits of Visionary Companies. So I'll put on the screen now an article which I found on Growth Institute, giving some examples of big, hairy, audacious goals. So here we can see Google, Facebook, Uber, Tesla, Alibaba, Evernote, SpaceX, Microsoft and Nike. So I'll leave that on the screen for a few seconds just so you can kind of take that in. I'll also leave a link to the article in the description later on as well. Now, going on with the big, hairy, audacious goals, it's kind of useful to go and look back at a company. Did they make an audacious goal in 2010 to say, okay, over the next 10 years, we plan to do this? And then you can go and look at the latest kind of shareholder letters and then see, do they mention anything about this? Did they achieve the goal? If they've kind of just not mentioned the goal at all, then I guess in this case, you can kind of bring into question the honesty, trustworthy and integrity of the management team, because they set this big goal and they've not even updated us on how the goal is going. Are we tracking towards the goal? Maybe it's just completely been ignored and it's now disappeared. So what happened to that? That's kind of one of the things we need to look at with these goals. So now we'll go and look at the management checklist. This is kind of a few key points that I look at when investigating the management team. So the first one, is the CEO honest during the interviews and earnings calls? Then is the ROE and ROIC above 10% and staying at that level? Is the company debt free? Is the CEO's approval rating on Glassdoor above 90%? And are the management team buying or selling the company's stock? So this is another way you need to kind of keep an eye on it. You can find this in proxy statements and things like that. So whenever the company management is selling a large amount of their shares, that needs to be declared. So you want to kind of keep an eye on that. If there's something a bit untoward going on in the business and then suddenly you see the CEO or the CFO or the senior management, they start to unload like a huge amount of their own stock, say 30% or something, then you should be concerned that something's going on in the business that they might know about, but you don't. So although there's a lot of work involved in doing the research for a company's management, once you've kind of put all of this together, it's just a matter of keeping up to date with what's going on. So the way I do it is I have a folder for each company that I'm researching, and then within that a subfolder for the management team. So I'll save any articles I've read or particular things I notice. So in the case of earnings calls, I might notice, okay, they say something particular there, which I don't think is right. And then I'll kind of make a note of that. Okay, this seems like the CEO is being dishonest here. And you can kind of just build up a file on each company that way as well. And as you carry on with this, the only time you need to do really big reassessments is perhaps something's happened within the business, that maybe there's been an event or kind of some scandal involving the team. So that's when obviously you need to go back and reassess that as well. Or if the management team changes, then you have a new CEO coming in, for example, then you need to go and do the research on that CEO. Do you think it's a good match? Are they coming from the same industry? What's their track record with the previous companies they've worked for? So for the next part, we're going to look at the warning signs. So the warning signs are pretty much the checklist, obviously, kind of, but the reverse perspective of it. So here we're looking at if the return on equity or the return on invested capital, if that's decreasing. Also, if the company is taking on more debt, so the debt load is increasing. Perhaps we notice that the CEO is not being decisive when dealing with problems. That's kind of an indication that something might be going wrong with the management team as well. As we covered previously, maybe the executive team is selling too much of the company's stock. And another measure of something wrong with the senior management is if they're buying back stock, but their stock is overvalued. So that's not making effective use of the company capital because they're paying too much to buy their own stock back. So that's it for the video. Thanks for watching. So if you enjoyed the video, please hit like and also consider subscribing to the channel if you haven't already. So let me know what you think in the comments. Do you kind of assess the management team for each company you're looking at, or do you not put too much emphasis on this? I'm interested to know, so please leave that in the comments. So thanks for watching, and I'll see you in the next video. Cheers.